Hello and welcome to another update video about Doge, the the father of memes, the king of memes. Doge, followed through. After the last update, it's possible that we're forming here this 5-wave structure to the upside that we discussed in the last update. Made you aware when I saw a first initial 1-2 setup form here after a possible low point in our trend reversal area, where the price reacted to the 12.3 cent level, which is the 50% Fibonacci retracement. And it started to go off quite impulsively, given that here what I counted as wave 1 was a 5-wave move, or is a 5-wave move. Okay, so the main thesis is wave 4 bottomed in our support zone. The price turned around impulsively, formed 5 waves in wave 1, formed a small wave 2 pullback, and is now in a 3rd wave rally. And this 3rd wave is likely unfolding. And I shared with you in the last video the possible next target levels. Actually, maybe I should reduce it down, because my initial target, obviously the 100% extension level, is resistance, normally important resistance, a level at which the yellow B wave, which is the alternative count, could get rejected. So if we indeed are in the yellow count and the bulls cannot push it higher, it's an ideal spot to reject this rally and to reject the price at the 19.6 cent level. Okay, that's also just below the March high, so an ideal spot. So pay attention to that one. But pushing above it, reaching 21 to 22 cents, maybe even higher, would definitely shift the probabilities further towards the white scenario, in which the price is forming a potential 5-wave move to the upside. In the white count. And the 3rd wave, normally I say for a 3rd wave, minimum target is the 1.236 extension. But to really believe it's a 3rd wave, especially in crypto, I'd like to get the price in a 3rd wave to the 138% extension level at least. And that is at 22 cents, That's here. 22 cent level or higher. Okay, the extensions are always possible. So I think it is worth observing the 19.6 cent level. But until we have evidence that a top is in place, I would focus on the white count. Then once we get to 21, 22 cents, it might be worth watching for a 4th wave pullback. That's not due yet. I mean, it can get rejected at any point in the yellow count. But for now, I give the bulls the advantage. And if 5 waves to the upside form, then the 5th wave should reach 23.6 cents plus, based on what I can see right now, at around 23.6 cents. And that's the target range we discussed in the last video. There's also another Fibonacci level of a larger degree, so there's good Fibonacci confluence there. Above that level, 24.8 cents or even 26.4 cents are the next common targets, which would be absolutely common for a 5th wave here. That would be wave 5 of 5. So that's sort of the trajectory, upside uptrend, But which level now needs to hold? I mean, there are always levels that, if broken, would confirm the alternative wave count. It's just important to be aware of the relevant levels and how to distinguish between the different potentials on the chart. So for example, the yellow scenario would be confirmed with a break below the 16 cent level based on where the price is now. Now that threshold might shift as the price goes higher. I would have to adjust the micro support area. Okay, so the 16 cent level there needs to hold, because that's the golden ratio level of the 3rd wave rally, or what currently appears to be the 3rd wave rally. And any break below it would not only rule out the impulsive potential that will already be ruled out below the 50% Fib level, but because we are in a 5th wave here, I have to consider that this might be a diagonal, even though wave 1 looks like a 5-wave move. But that's all, there's always room for interpretation, So I definitely allow the price to come down to the 16 cent level in this scenario, but a break below it, I would rather confirm yellow for me. And then it might mean, it wouldn't be bearish, but it would mean that this 4th wave, which in the white count presumably finished on the 19th of March or 20th of March, well, that's actually still unfolding. And yeah, we've recently had also a break above this descending trend line. We talked about that in the last video. That gave it a little bit more upside pressure. And now we have reached the next, or not quite reached the next structural resistance, which to be honest is pretty much around that 100% extension level anyway, at 19.6 cents, maybe a little bit lower than that, which is here the previous swing high from the 14th of March. So overall upside is expected to continue at the moment, whereas a break below 16 cents would be, yeah, that's the key threshold where I would say that the immediate upside scenario is getting challenged and we're probably going to see a C wave to the downside. Yeah? That's my update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.